All right. Hello, everybody, and welcome. My name is Greg Cohen with JWB, and you've made it to JWB's Property of the Week. Thank you for being here. If you are interested in investing in rental properties, if you're interested in investing in the Jacksonville, Florida real estate market, if you're interested in investing with JWB, you have definitely made it to the right place. Today, we're going to go over a turnkey rental property that I think would be a wonderful addition to your portfolio. And so I'm super excited that you're here. If you are maybe not ready to pull the trigger, but you're interested in investing in rental properties, but in that due diligence phase, you are also in the right place. Thank you for being here. This is going to be a great experience for you where we're going to break down this rental property. I'm going to go through the things you need to be paying attention to. And this is going to be more or less a trial run for you. Use this as a trial run. Think of this as putting yourself in decision-making mode so that when you're ready to pull the trigger on that investment property, you're going to know how to do it, know how to analyze it, and you're going to be in a position of strength. And for all of you who are joining us live on the group and on the other social platforms, thank you for being here. I'm pulling the group up live on the phone as we speak here. And if you have any questions and you'd like to, I see Jake Hargroves in on the call. Yo, good to see you, Jake. Thank you for being here. If anybody else would like to fire in any questions or comments, I'll do my best to answer those live on the call. And if not, I'll jump right back in afterwards. And if you would like to be the first to know about the property of the week, I actually share this the day before today. I share it yesterday, which is Thursday, on the Not Your Average Investor show. And so if you want to be the first to know, join us on the Not Your Average Investor show. I know Jake is there, and I appreciate you being there, buddy. That's when I reveal it. We have an excellent show every Thursday where I break down a property of the week, and properties tend to move pretty quickly. So if it's something you'd like to be the first to know, I hope you join us. You can register by going to nyais.com, stands for Not Your Average Investor Show.com, nyais.com. You can register and join us for free. And without further ado, we're going to jump into the property of the week this week, which happens to be at 6125 Wilson Boulevard on the west side of Jacksonville. And the first thing I'm always going to take your eyes to when you're thinking about investing in a rental property is not the price, not the picture, not even the rent amount. I'm going to try to keep you focused on the thing that is most important, which is your monthly cash flow and your return on investment. All right, so the monthly cash flow here, $206, what this represents tangibly is the amount of money you're going to put in your pocket every single month on a normal month, right? A normal month would be defined as, and I'll stop the screen share here for a second. A normal month is defined as the month where it's rented and nothing out of the ordinary happens. So you've got your rental income coming in, you take away your principal and your interest and your property taxes and your property insurance payments and your property management fees, and you're going to be left with right around $200 a month. Now, the big key here is not $200. Sometimes people focus on this and they say, well, $200, you may say, well, that's really awesome. You may say, well, that's not enough. The point here is not whether it's $200, $225, $175. The key here is that you're able to buy an asset. You're able to take out debt on that asset, smart debt, and the asset pays for itself and then some. That's the key, because when that happens, this becomes scalable for you. It's very rare that if somebody comes to JWB, they have a goal in mind, which can be accomplished by buying one rental property. Many times the goal is accomplished by buying 5 or 10 or 20 or whatever the number is for you. So the big takeaway when you look at positive cash flow is that, wow, this pays for itself every single month and then some. Now this can become scalable. The alternative, if it's not positive cash flow, is it's a liability. And it's not very fun to think about scaling up if you're $300 negative cash flow every single month on every property. Times 10, that's $3,000 a month that you're in the hole. So the goal here is positive cash flow, not because $200 is going to change your life. It's because you're investing in a scalable asset class that pays for itself, that you can take leverage out on, and it still pays for itself. And over time, when you invest for a full market cycle, history shows us that it goes up in value. Really a great thing to take out smart, inexpensive debt on assets that pay for themselves, that go up in value over the long run. That's what you're investing in with that asset here on Wilson Boulevard. So that's a little bit of insight into the $206 a month. 8.22% reflects, that's what I think of as a great equalizer. That's really what you want to look at. 8.22% is your net rental income. It's also your tax savings. It's also your principal pay down. Now, those last two are two additional profit centers that you may not be considering. Estimated tax savings and principal pay down. Principal pay down meaning that that's the resident paying down your loan for you, which is a profit center. And we're also going to include some negative items that happen. They don't happen every single month, but they happen every once in a while. And that would be maintenance costs and vacancy costs. We're going to include all of that. We're also going to include tenant placement fees, which happen when you put a new resident in your home. So we're going to take all of the expenses, either that happen on a normal month or that will happen over time. We're going to include all of it. We're going to include profit centers that you might not be thinking about and divide it by your initial investment. And that's how you get to 8.22%. The only profit center that is not accounted for here is actually the biggest profit center, which is home price appreciation over the long haul. But the thing about home price appreciation, I'll stop the screen share again here. A lot of people don't know how to evaluate home price appreciation. A lot of people have said in the past, everything's going to appreciate. That's the way it was in 2006 when I was investing. People thought it was impossible for home values to go down. As we learned later, it was possible. It happened 2008 to 2011. Values went down. And after that, people said, I'm never going to count on home price appreciation. And like most things, the tried and true way to actually do it the right way is somewhere in between. And the right way to think about home price appreciation is that real estate is cyclical and that market cycles repeat themselves. That's what a market cycle means. Things come back to the norm if you give it enough time. And that market cycle is generally 10 to 20 years. So if you're investing for a full market cycle, you can count on home price appreciation, and you want to be investing in a market that has shown to appreciate at a rate that's higher than the national average, at a rate that's higher than comparable cash flow markets. And that's what Jacksonville is. Jacksonville's historical appreciation rate is actually 4.3% per year on average. It's 3.6% across the country. So Jacksonville's home price appreciation rate on average since 1991 is actually 19% higher than the national average. So as we go back to the doc here, if we go ahead and include that home price appreciation percentage here, you're going to see that this number goes way up. And the only reason I don't do this right off the bat is because I don't know if you're going to invest for a full market cycle. And so if you are, feel free to count on home price appreciation. That's what I do. When you count on home price appreciation and you take in the benefits of leverage, you're going to see your return on investment goes up dramatically. And the key here is why I love smart debt, right? When you are investing in an asset and the value of that asset goes up 4%, but you only put 25% down, that means that your return from that appreciation is actually 16%. And that's roughly what's happened here and why the value has jumped up incredibly there. All right, so 8.22%, not including cash flow. That's our target here for the Jacksonville market for positive cash flow properties, which we have here. This home is a renovation, as you can see from the picture here. And just going through some of the numbers here. 6125 Wilson Boulevard, Jacksonville, Florida, 32210. $170,000. Purchase price, 4 beds, 2.5 baths. Rent rate of $1,224, property taxes of $2,500 a year, roughly. Homeowners insurance $954, no HOA, and you've got your monthly management fees included here. Home is built in 1956, about 1,600 square feet, and it's on septic. Let me show you where this home is, and then I'm going to teach you a little bit about rent credits because, well, let me show you this, and then I'll get to rent credits because it's a pretty cool part of this investment property. What I'm looking at here is all of Jacksonville, and all these blue markers are all the homes that we have bought, sold, and continue to manage for our clients here in Jacksonville. There's over 2,000 properties that we have bought, sold, and continue to manage. And the reason that should matter to you is that this represents consistency, right? This represents risk mitigation for you because all the numbers that I just put on that spreadsheet have to be validated. And if you're going at this alone, or you're going with another company that doesn't have this type of track record, they may not know exactly what those numbers should be. And those numbers can change dramatically. $25 here or there on rent changes dramatically, right? They need to know exactly what your property taxes or your insurance costs are going to be, right? They need to be in line. They need to include things like closing costs on your transaction. All of those things really matter. And so the way that we do this with confidence is we just simply go to the neighborhoods that we're already in. We do it over and over and over again. So I'm going to zero in here. This yellowish, greenish dot here, I don't know, I'm colorblind, so forgive me. That's Wilson Boulevard. This is the home that we're talking about. And just look here on the west side as to how many homes we manage right now in this area. Should not be any question mark as to how we determine rent rates, market values, how we know what property taxes are going to be. We simply go to all of our current comparable sales, current comparable rents, look at what property taxes are, look at what insurance rates are. And we've got a ton of data points here, and that's how we serve you. That's how we create consistency for you. And in essence, that's how I under promise and over deliver for you. It's because I've got all these data points, and that really helps you. The last thing I'm going to share with you here is the value of a rent credit. So this home is already rented through 2023, and it comes with a $2,400 rent credit to the buyer at closing. You may be saying to yourself, why would JWB give me a rent credit? If the home is already in great shape, it's already up to the JWB standard of renovation, which it is. If the home already has a resident in there, that's the JWB standard resident, and that resident's already there until 2023, why would JWB be giving me a rent credit? And I'll explain why. Well, before I do that, let me tell you how powerful this rent credit is. This rent credit is given to you at the day of closing. We literally give you a $2,400 check. It goes towards your return on investment. The reason that we do that is because we want to create a win-win-win situation for everybody involved. We want to create a situation where the resident is taken care of, you're taken care of, and of course, JWB can have an asset to sell. The story behind this property is we bought this property. It was already occupied with this resident in place. The resident currently is paying below market rent by $100 a month. They're paying below market rent. So when we look at that asset and we say, well, we'd like to buy this asset, we feel like we can create a cash flow opportunity for our clients, but we've got a resident in place who's already has a lease in place, and that's not going to change until 2023, and it's below market. What can we do here? Well, that's where this rent credit comes into play. What we do is we buy the asset, we keep the resident in place, we then go ahead, of course, renovate if we need to. In this case, we've already done those renovations. The property is up to the JWB standard, and we can then go ahead and sell that house to a client. What we do is we need to make sure that the client's going to get top market rent so that their returns are going to be higher. We do this rent credit to be able to create that ability to match the market rent. So it's $100 below market rent right now. Currently what the resident is paying, JWB makes up that difference, $100 a month. And we do that for a full 2 years for the client that purchases this home. That way, we then can buy the asset and sell the asset to a client while keeping the resident in place. And then over time, we're going to step the rent up with that resident. Of course, we disclose that with them, and they're happy to do that over a time period where it's not a take it or leave it moment right off the bat. So it's a wonderful solution for everybody involved. And the client really wins here who purchases this home, because you get $2,400 right off the bat. And that's a wonderful supercharger to your returns day one when you close. So there's the $2,400 rent credit. That's the client who purchases this home will enjoy that rent credit. And for those who follow along with the properties of the week, it's not too often that you get a rent credit. So if you can certainly get one when you buy a rental property, it's a really great way to walk into an investment property. If you're interested in this property or something very similar, I would highly encourage you to reach out to my team. If you're a current client, reach out to your JWB portfolio manager. They are there and ready to help you add this one or one similar to your portfolio. If you're not a client yet, go to chatwithjwb.com and we will go ahead and set up a time with you. Now, the thing is, our properties tend to sell very quickly. This one actually sold since the time we went on to the Not Your Average Investor show till now. The property has sold, but I don't want you to be discouraged. We have many homes that are exactly like this. If I opened up that map, you'd see how much we do the same thing over and over again. So take this as a learning opportunity. If this is something that you're interested in, we have many homes that are very similar, and still reach out to my team. If you're a client or you're not, reach out to my team. We have another home very similar, same price points, same neighborhood, same return on investment, same cash flows. And we can absolutely mix and match and make sure that we can add one very similar to your portfolio. I hope all of you join us for the Not Your Average Investor show going forward here. I see we got a couple of comments here. I'll kind of jump in here. We got Bill Oxley says, hey, all right, man. Bill's just being a nice guy. He said, have a great weekend. Need to walk and talk on the beach this weekend. All right. He wants me to do a walk and talk on the beach. I'll see if I can swing that, Bill. No promises, man. No promises. It's family time on the weekend. So I don't know if I can jet away for that one, but I'll see what I can do. And Jake said we can only see the spreadsheet, by the way. Well, you know what? I hope I didn't screw up the AV on this one. But with that, I will leave you guys. Thank you all for tuning in, and we'll catch you on down the road. Take care.